Hey everybody, Jim Malone here, coming to you live from Dallas Trading Floor. It is Tuesday. Well, the market the market is still under pressure. I sent out some kind of alerts today, basically on TikTok and also on YouTube, and I think it is time, possibly, to start looking to put some of your money in cash right now because it doesn't I mean, what I'm looking at, the market trend is under pressure, and I don't know when it's going to turn over, but I do think it is. So just wanted to be totally upfront about that. And I think that we need to be careful here because we're in a situation where the market trend is under pressure, and we may see some backsliding. So if you do have some positions that are in the green, please close them. Consider closing them now because I do think there's going to be. Now, obviously, this might be a false alarm. I hope it isn't. I hope it is, actually. I hope we just continues to go up. But there is some market pressure right now. So try to move your portfolio into cash, and then build the watch list, and then we'll wait for, kind of a better entry point because many of the high flyers that have been going up for the last few months, they're just not forming bases anymore, and they're moving off a little bit. So it's not really an optimal time to be starting out new positions. It's time to kind of close shop and get under cover because we may be raining here a little bit. So I hope that is not the case, but that might happen. So I just kind of want to show you sort of how it's is. The market trend is still under pressure, and but the S&P is eking out. It's eking it out just barely. The Nasdaq is below 1100. As you can see, this is the 50-day moving average, and you can see it's pulled below that. So this is the reason why I want to be very concerned about this. The market maybe turning. It's up a little bit today. It's making an effort to get back to that line, but I don't know if it's going to make it all the way back to the line, and if it doesn't, it might be a situation where we want to, possibly kind of wait out the storm because it may be coming. This is, of course, the Spider. This is the world's largest ETF, as you know. This is actually the weekly chart, and I think it's important to look at this one because the low for the S&P 500 was made on March 23rd, and of course, it was about 211. That was, that's amazing. It seems like a lifetime ago that that happened, but it definitely moved down to there. But as of late, as you can see, there's some red bars here. That means selling, and as you see, it's pulled below the 50 days. So this is kind of something we want to be concerned about because that means that we may get a retest. I hope not all the way down to 211, but we may get a retest of the low. So and there's several places where that could possibly happen. It could possibly happen around right below 300, and then it could also happen around 272. So right now, the Spider is at 329, 325 is kind of a critical level. I do think that we may be pulling back from this, but from here, so we got to be a little bit careful right now. So definitely time to kind of possibly close up shop if you've got some good winners. You might want to take that off the table. Try to get into cash because there's going to be some opportunities. There always are when the market changes, but I do think we're going to have that. The most important, of course, right now, at least for a growth stock investor like I am, is the Invesco QQQ Trust, and that is off a little bit. The key level for that was 275. It's at 270.97 when the slide was taken. It's up today about $3, 1.9%, but it is still below the 50 days. So I do think that we're going to see this pull back a little bit. The question is, how low will it go? Who knows? I don't know, but it may go. It potentially could go as low as 180. I don't think that's that likely, but it might. So that's what I'm kind of seeing in the slides. So just wanted to be very upfront about that in terms of showing you that because it is important in terms of the way it potentially is going to trade. So the definite thing to do is to be in cash right now, and that I think will be probably a better way to go. So that's basically kind of my short and sweet uh, um, thing, and so be careful out there. Just Elon is it cost me $1. Ouch! I am so sorry about that. It's one of those things. I do think that it's going to move. Let's take a look at the Tesla chart. I know that that can kind of be painful sometimes when you think something was going to continuously go up, and it doesn't always do that. I did buy some yesterday for full disclosure. I bought on the pullback to the 21-day line. So let me show you that really quick. This is a chart, of course, of Tesla. Basically, it's hovering right at the 21-day line, and currently that 21-day line is about at 411. It typically goes up each day because it still is in ascent, but I'd be really, really careful buying it. Anything. I do think it's going to pull back to the line, but it looks like it's holding the line, which is good. Who knows what's going to happen on battery day, but it is down a little bit. I do think it probably will shrink a little bit after after battery day. So, I just don't know exactly when that will be. Well, I know when battery day is today, so I just don't know, what that will be. But I do think we're going to pull off a little bit, probably down to the 21-day line. It's very volatile, so be very careful entering it. I wouldn't enter it any higher than the 21-day moving average, and that's about 411 right now. So, just kind of a kind of a thing there. Got dynamite and super dry. What's the buy of Tesla? What's the sell point? Okay, great. Thank you, man. Yeah, wow. Hey, cool. Cheltenham, home of Cheltenham Gold Cup National. Yeah, this is cool. I like this stuff. Yeah, I'm gonna have to check that out, man. That's great. It's been years since I've been to the UK. I really love it there. Not in the winter though. Just want to tell you that I'm kind of a summer. I'm a fair weather friend, but that is so cool. Yeah, I think get your powder ready. I think there's gonna be an opportunity to buy Tesla. I do believe there's going to be a pullback probably towards the end of the week, and we may get the all curve. The only real cautionary tale is that the market is still kind of teetering on the edge, and I just don't know, if it'll be a pullback. So get your powder dry. There's going to be some opportunities, but just be super careful entering anything right now. So, any thoughts on Apple? I had Apple. I did sell it at, for full disclosure, I did sell it at 109. That was my stop on it. It has fallen a little bit, but it's fallen right back to the 50-day line. Now, see, here's the thing. Typically, when a stock is in decline, it kind of always it will settle on these lines, and that's what you kind of got to look for. Right now, the 50-day line is at 111. I'd be a little bit careful buying there, though, because this did have a big drawdown, as you can see here. This is a distribution day. What a distribution day is for everyone out there. I know that's kind of a, what is a distribution day? Well, what happens is that ever so often, especially in a declining market, a market that's adjusting, the big players will take positions off, and you can tell that because it'll typically have this spike here, this big a red bar here above the 40-day line, and you'll also see a corresponding spike down. So when you see that, that's typically a distribution down. That's definitely the case here. Now it did power up back up, after that distribution day, it did power up to the line. I can't really give you a good buy point on it right now because the last true buy point, and it really doesn't make any difference, was a cup and handle. I've illuminated that here on the green. You can see it. And that was basically at 72. So that is a long way back. And the reason 72, you think, well, I remember it being higher than that. Well, that was before the split, of course. But on a split adjusted basis, that would be at about 72.06. So right now, I think you got to be a little bit careful with Apple. Wait until it starts to move back up above the 21-day line. And I do think that's going to happen, but it's tough to buy it right now. It's just one of those things. The market is sort of changing its character to a little bit. Now, is that the end of the world? No. I think that there's just a lot of uncertainty right now with the U.S. elections. I think this next 6 weeks is going to be kind of hairy because nobody kind of knows what's going to happen. I think once that's done, I think once we get into November, I think it'll firm up. It's just there's just a lot of uncertainty out there, and so a lot of people are just kind of taking the chips off the table and waiting, and that's not a bad idea, really, because I mean, there can be a change, and it can change how. So it's better to kind of, pare back your positions a little bit, get ready, get your powder ready, and I think there's going to be some good stuff coming up. And I'm going to try to really be diligent about getting, the watch list out there. It's just a tough time to buy right now. There just aren't that many good base patterns. What do you think about Walmart? Well, Walmart is great stock, of course, and it's located in Bentonville, Arkansas. I don't know if you've ever been there, but believe it or not, it's really not a bad place. It's actually very close to Dallas here. So we typically get a lot of the stuff. Now, just kind of want to show you this. Of course, as I don't know if you've heard, but there is going to be, it looks like the deal with TikTok is going through, and it looks like Walmart's going to have a minority stake in that. And that's going to be really important to Walmart because the advertising that they're doing just isn't working anymore for millennials. They just don't watch television, obviously. And they're watching hopefully stuff like TikTok, hopefully like this, and possibly YouTube because I'm on YouTube too. But I hope they're watching that because that is the place that everyone's going now. So that's why Walmart is so interested in that. Now, interestingly enough, we did have a spike up today. It's moving up nicely today. It's still in the buy zone though. It's still in the buy zone. So if you did want to make a last minute buy on this was one of them that I would be pretty confident in buying. Now, will it zoom up to where it was before 151? I don't think so. At least not in the short term. But I do think that Walmart is a quality company. They're doing a lot of things right, as they always do, and I do think it's potentially investment worthy. So let me kind of take a look at the criteria for it. It's basically 7 out of 9, which is really great. The only real big, it's really technical. It's sales increase percentages, and of course, as everybody know, we're in the COVID-19 lockdown, so that is no surprise. And the relative strength, it's only a 71 relative strength. I usually like to see at least 80, but other than that, it's a stellar company. So that's just my opinion on Walmart. But I don't, even at this level now, I wouldn't buy it too far above this level, but I think you're okay. You're in the buy zone on this right now. Now, is it better to buy at the buy point? Yes, but this is not a bad place to buy it. Now, what do I mean by that? The buy point plus 5% is your buy zone, and Tesla, no, and and Walmart is definitely in the buy zone right now. So very cool. Thanks for the question, and hopefully I can see some stuff. I'm going to see about this gold cup. That sounds really awesome, actually. Okay, that buy point for Apple. Well, I don't really have a buy point for Apple right now. I had one. It's 72, but it was pre-split. So I think you want to hold off on Apple right now, just until it firms up a little bit. I do think that's going to happen, but right now, not so much. Okay, what do you think about the Walmart? And oh yeah, oversold. Yeah, sure. I think you're right. I think you're right. I think now it's time to be kind of getting cautious. Put some money in cash, that kind of thing. I think that's a good idea in this particular environment. I just really do. Um, yeah, so there you go. Okay, so let's see what we've got on TikTok. Thank you so much for waiting, everybody. And by the way, if you want to see the charts, I'm broadcasting on YouTube as well. So on YouTube at youtube.com/DallasTradingFloor. And of course, this is episode number 136. So you can go right to it and see what I'm showing on the charts. Do you think it's possible? This is a possible correction. Yeah, I do think so. I really do think this is a correction. It hasn't retested its lows, and its lows were made on March 23rd. That's a very, very good question. Good, very insightful, because yeah, I do think there needs to be a testing of the low. Now, is that going to be the end of everything? Well, correction means that it's going to go down about 10%. So I do think we may see a correction, but overall, I think once the economy starts opening up again, I do think we're going to be in much better shape. So I don't think it's the end of the world or anything, but I do think you want to get into cash right now. Yeah, not happy with Batter Day. I'm not either, but hey, sometimes it happens like that. Dead cat bounce. Well, I have 400 call and it ends this week. Should I sell it? I would sell it if you have it right now, and it's if you have a 400 call right now. Right now, Tesla is selling. Let me look at the chart here. I think it's selling for 423, but let me just just so I get the exact chart and I give you the right answer here, as right as I can get anyways. Yeah, it's 426.54 currently. I would sell it just because right now it's time to get into cash. So if you made a little profit, take your profit. Nobody ever went out of business by taking profit. So just remember that, nobody ever went out of business by taking profit. So you got a little profit, don't get greedy and just take your profit and go out and spend it on something nice, maybe for your wife or girlfriend or boyfriend or whatever. I don't know, but that might not be a bad idea to do right now. So there you go. Which should I buy Tesla? I think that the only way you want to buy Tesla right now is kind of the way I bought it yesterday, and I did buy it yesterday. So full disclosure, um, is if it pulls back to the 21-day moving average, and right now that's about 411. Now I would try to buy it at no more than 411. I think it may correct lower than that, but I think you're fairly safe at 411. Now, can I predict the future? No, I wouldn't be here if that were the case. But I do think that's fairly good. But it's right now it's selling a little bit too high, 427. I don't think you want to be buying it at that price. If it does pull back, then you might want to do it. So you might want to put in a limit order. I may put in a limit order maybe at 405 or 410. See if you get it. I don't know if you will. Typically, Tesla trades at the lowest at about 10:30, about 11:30 time Eastern Standard Time. That's typically when it makes its low on each day. So as I've been watching it, but is it guaranteed? No. But I definitely think even though we are in a market under a little bit of pressure and buying on pullbacks, typically in that kind of situation cannot necessarily be the best thing. I do think it's not a bad idea with Tesla anyways. I said, which software do you use tracking chart as well as checking the stock trade? I actually use a very interesting software. It's very, very good. It's professional grade software. It's called MarketSmith, and it is made by Investor Business Daily, and it has just tremendous features in it. A lot of these features I used to do manually. I used to raw the charts manually. This has pattern recognition in it, and it does do pattern recognition, which I just love because I can scan through literally thousands of stocks this way. Before I could only pick a group, and then I would look at them and I would draw the charts, and it'd take all afternoon. Not that it's bad. I mean, I think it's a great way to learn, but it definitely, wasn't as efficient as MarketSmith. MarketSmith is really, really great stuff. So I don't get paid anything from MarketSmith. I wish I did because I do recommend it. I think it's excellent. And if you're a CanSlim trader, I think, as I am, I think that's the way to go. CanSlim is really many of the top traders in the world, like David Ryan and a lot of the guys that won the investing championships year over year. They're now, for the last 20 years, most of them have been CanSlim traders. I can't really think of anybody in the last 20 years that's won the national investing championships in the U.S. here that wasn't a CanSlim trader. And of course, the CanSlim method was basically invented by William O'Neill, and he was the founder of Investor Business Daily. And I think it's very worth your time to look at this. Just look at the site investors.com and kind of get an idea. Now, some of the stuff you're not going to use necessarily. It's not for everybody, but if you're a serious trader, it's something you might want to consider. So I definitely have, I've definitely benefited from it. Absolutely, this is absolutely right, Mega How-To Man. This is correct. I give you a check mark on this one because it's funny, but I don't know why this is true. But September is a tough month to trade. I always like to get into cash, at least more cash, in this month. And the reason is because it just tends to be fickle. I mean, it just tends to be fickle. I'll just show you kind of where I'm standing in terms of my allocations of my portfolio. This is a small portfolio, by the way. This is available to see for anyone as I'm trading it, and I update it every day. And this is basically a small portfolio. And this kind of shows you how my portfolio looks. And of course, I have other portfolios that I trade as well, but this is my small one. And basically, as you can see, I'm mostly in cash right now, mostly in cash. So I try to eat my own dog food as much as I possibly can. I do have 3 other positions. I am in Tesla, and we're up basically 12% as to where I bought it. Now, I did buy it a little bit of time ago. I haven't really doubled down on it at 383. That's where I got it. And then, of course, I'm up on Oracle. And Oracle's been up. It's kind of been, hanging around the buy point. This isn't really a strong buy in this market. It's just, but I had to have something in there. I'm also in Taiwan Semi. This is down I did lose my position in Newmont Mining. I want to show you that. And as you can see, I cut my losses at 7%. And this is what I recommend folks always to do, because you always want to maintain your trading capital. This is the most important thing. So I always set a stop loss at about 7% or 0.93 of what I bought it. And if it exceeds that, well, I'm out, and I just kind of sit on, I sit on the sidelines and I say, "Oh, I lost on that one." So, but my hedging position usually is always cash. So, that's a very very insightful question about February. About September. It just always seems to be this way. It's funny. We had this roaring August. It was fantastic. I think hopefully everyone makes some really good money. I certainly did. I certainly did. It was an excellent August for me. September hasn't been so hot for me, but we try. We try, and then we get up and each day and we try to do the best we can. So that's kind of where it is. Yeah, it definitely is. Is MGM at the buy level? Wow, I haven't heard MGM in a long time. The thing about it is that some of the gambling stocks may come back. The biggest problem I see with MGM is its exposure to Las Vegas. Now, Las Vegas is a fun place, but not when the COVID-19 thing is happening, because unfortunately nobody can go there. It's a fun place to go for 2 or 3 days. I definitely like going there. But it's definitely not. Unfortunately, in this COVID thing, it's not working. And I don't think it's a buy. And unfortunately, I'll just show you the chart. And it's painful, but it's a well-run company. The 21-day has moved up. There's been some action. There is a buy point on it. The buy point being at 23.79. Unfortunately, it's at 21.63. So, it's just not a time to buy. Now, why would I not buy it if it was cheaper than the buy point? You think, wow, you want to buy something on sale. Well, stocks really aren't like that. They're kind of like inventory. So, you want to buy stuff that's good and getting better. You want to buy at highs and going higher. You typically don't want to buy anything that's more than 15% off of its high. And the reason you don't is because, if it gets going in the downward direction, sometimes it doesn't stop. And I'm not saying that's the case with MGM, but the chart, even though it has been gaining strength since the COVID thing, it still isn't back up to the level it was before the downturn. So I just don't think you want to be in MGM. And I'm sorry to tell you that, because that sounds, here I am, Debbie Downer, and I don't like to be like that. But no, I don't think you want to. You might want to watch list it, but it's not at the buy level. Don't. It's not a good time to go into MGM. Just isn't, unfortunately. In good times, it's a terrific stock, but right now, not so much. What about Amazon? Well, okay, let's look at Amazon. Amazon has been one of those stocks that has just in the last. Here's what's going to happen, and this is what you want to be really careful when you're in these market in under pressure, because when you have these markets under pressure, there's a tendency to say, well, it's at such a good level, I'll just go back and buy it again. And that's when you get spanked. Unfortunately, I've done this a million times. It's so easy to do. You think, wow, I've made so much money, I'm just going to go in. Just don't do it. This is a little bit tougher market. Amazon has fallen off its mark. Now, I know this sounds strange, but potentially, if the market goes into a downturn, Amazon is potentially short. I know this sounds bizarre, but I will show you why here in just a second. Amazon is pushing back up to the 40-day line, but it's sort of a desperation move. If you can see, there's the beginning of this. This is a shoulder, and this is a head. If it makes another shoulder about here, about 27, and then starts to move off that, it will be a classic head and shoulders short. And I'm going to keep an eye on this one, because if we go into a market downturn and Amazon is shortable, which it isn't right now, I am going to be in for the short, because I think that there is a lot of money to be made on Amazon shorting. It's not going to go away. The company's not going to go poof or anything like that, but it just kind of got ahead of itself, and I don't think you want to be in it right now. It's not a buy right at the moment. What about Tesla? Well, I love Tesla, of course. As you know, I've done well with Tesla in the last few months, and it's been very, very good to me. Now the question is, will it continue? Well, I don't know, but it's still an upward trend. I'm being much more careful with it than I was before, but it still is showing some strength, and basically it's showing some strength on this 21-day line. This is kind of where you want to buy it. You know, if you're going to buy it on the pullback at all, and of course I am, but I don't necessarily recommend that to everybody because of this market uptrend under pressure. You want to buy it right where this green line is, and the reason why is because that seems to be where the programmatic traders are supporting the level. Now, if it crashes through this green line, ouch, it may go all the way down to the 40-day, and then ouch, it may go down to the 200-day. I don't think that's going to happen based on this chart, but I do think we are getting some support at the 21-day. That's the only place I would buy it right in this market is pull back to the 21-day. Now, where is the 21-day today? Well, the 21 today is at about 409. Formula 409, remember that. And if it pulls back to that line, you probably can buy it. But just be really careful. I would go in with no more than half position. And what do I mean by the half position? Well, if you take your portfolio, divide it by 8, you get 8 full positions, kind of like pieces of pizza. And so you don't want to go in with any more than half a pizza or 1/16 so of your total portfolio. So that's what a half position is. That's how you want to enter Tesla in this market because it is under pressure. So, okay, let's see. Bought Tesla at 435. What is the price to sell? Or wait until tomorrow. You know what? I think you should wait, Mohammed. On this, I do think it may pull off a little bit, but you want to don't if this thing moves below 409, you want to be careful because then it could fall further. I do think you want to protect yourself with a stop loss here. I think that's important. It's important possibly to be in a stop loss because on this. Let me see if I can give you a number for that stop loss. See if I can do that right away. So basically, we're at 435 is your number times 0.93, giving us, yeah, your stop loss on this probably should be set right about 404.55. So that's kind of where it probably would be best to have that stop loss. So just be forewarned. It's going to be a little bit dicey. It's probably going to pull back a little bit. I'm still a Tesla bull, but you want to protect your capital. Don't let your position move too far below because if it does change direction, it could change it fast. So you want to be careful on this. You want to be a little bit careful on this. So that's my opinion as well. Okay, Apple. Do you have any Tesla? Yes, I do. I actually have 200 shares currently for full disclosure, and I will show you that. I don't know if I can show you that in my small portfolio, but I do have 200 shares of Tesla currently, and I have sold call options against them as well. So that's my positions in Tesla at the moment. Do you have any FUV? Thoughts on FUV? Okay, let's look at FUV to see if there's anything there that I can either recommend or not. Okay, wow, it's not a bad chart. It's moved above the 40 days, so let's look at the chart on FUV. Okay, well, we do have some selling pressure. There was some buying pressure. Wow, it's 99. That's excellent. Three-wheel vehicles. Okay, well, interesting. I just don't know much about this company. It seems like a penny stock, but it isn't. It's $6.63. Let me just see if I could get some criteria for you. It's kind of interesting. This isn't that bad, actually. It's 6 out of 9. Would I buy at this level? I would be careful at this level. Let's see if there's anything to buy off of. There really isn't anything to buy off of. The only place I could see buying this would be at about 634 on the 40-day line. I mean, on the 59 line. That's about all I can say. It's not bad, and it's definitely outperforming the market. So I'd be careful on this one. It's a little bit thin, and I just don't know a lot about their story. But they do have 5% fund sponsorship, so it can't necessarily be too bad. I mean, electric vehicles are the future. The question is who's going to get there first, and that's a really good question. I can't tell you, but I definitely think that Tesla has a lead on that. That's for sure. So Walmart is doing the Amazon type of subscription and designer. Yeah, Amazon, Walmart, never count them out. They're smart guys there in Bentonville. It's amazing. I mean, it's amazing. Walmart, the Walmart people, they're very smart. I have to say, they got a lot of money too. So that's kind of cool. I have a 400 call. Okay, yeah, I think you should sell on that call. What are your thoughts on the small cap stocks and funds? Well, I'm not against small cap funds. I like them. But I just think right now, at least for the last 5 months, most of the action has been in the big caps. It really has. So I have nothing against small caps. I do think that if the market turns, I think there's going to be a return more to small caps than there have been. So, I do think that's the case, but I don't have anything about them. It just depends on the company. Now, I do like to see at least 1 million shares trading hands every day. And why do I do that? Because that shows liquidity. Now, the problem with a lot of the penny stocks is they just don't have that. So the bid and ask is very, very far apart, and they're not that liquid. So when you got to sell, a lot of times you don't have a buyer, and that's not a good thing, especially in a down market. So not a good thing. What do you think about Wells Fargo, Bank of America, and J.P. Morgan Chase? Run, 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 run. I don't like any of the banks. I don't like any of the banks. And why don't I like the banks? Well, I like what's in the banks. I like the money, but I don't like the banks. And why don't I like the banks? We are in a very, very low interest rate environment. We're in essentially a deflationary invasion. Of course, nobody's going to say that in a central bank because that's like, that is the foreboding word at all banks. It's deflation. But assets are losing value. For instance, commercial real estate is losing value. So the interest rates are very, very low. Not only the interest rates very low, but nobody can borrow because everyone's afraid to lend. So this is a problem. And in these kind of environments, banks don't do very well. They typically take lots of losses. So I can't be very, very excited about any of the banks. Now, the fintech companies, there is one company that I do like. It's not a bank, but you've heard of it, and I do think it's good. And it had a little bit better chart. There's been strong buying. It fell through the 40-day line, and I don't know if I totally want to buy it at this point, but I do think it's one you want to watch list, and that's PayPal. I've owned it in the past, and in the uptrend, it was doing extremely well. Now, it's fallen a little bit, and it's pulling back up to the 40-day line, but I think this is a better alternative than a J.P. Morgan Chase, like let's take a BOA, Bank of America. Wait a minute. Let's take a J.P. Morgan. JPM for JP Morgan. There we go. JP Morgan Chase. Now, this should be one of the strongest charts in all of the banking sector, but yet it's not that great a chart. It's sloping downward. It's going from upper left to lower right. That's not good, and it's fallen off the cliff. It has fallen below the 40-day average, and the 40-day average is below the 200-day, and the 21-day is below the 200-day. This is not a good thing. This is a distribution day. Do you see these bars here? The big boys are selling. We don't want to buy. We don't want to be in any of the banks. I'm sorry, we just don't want to be in them. You're not going to do well. You're probably going to lose money. So at least for right now. So don't I don't think you want to be in them. Wells Fargo, Bank of America, J.P. Morgan, doesn't matter. The best of the best is probably Morgan Stanley. Let's see how Morgan Stanley's doing. And the only reason Morgan Stanley is doing good is because they have trading. They don't have all retail banking. But even they're not doing that great. They have a little better chart than JP Morgan, but still not a great chart. Look at that. It's fallen down to the 2200-day line. Just not what you want to be in. Just not what you want to be in. There was some buy points, but you don't want to be in the banks right now. The banks are not the place to be. So that begs the question: where do you want to be? The techs are selling off, the banks are selling off. You don't want to be in either of them. Where do you want to be? Well, I think you want to be in cash right now. I think you want to be moving your portfolio to cash because there will be opportunities, possibly to short things, even like Amazon. But right now, I think it's time to kind of be careful and just be careful out there. What about Datadog? Let's look at Datadog. Datadog's kind of a cool stock, actually. But it was a high flyer. The question, can it remain a high flyer? That's a good question. And I just can't tell you that. It's been a little bit shaky as of late. So let's look at the daily chart. Then I'm going to look at the weekly chart. This is the daily, but I want to look at the weekly chart to get some directional ideas here. Well, it's still moving up, so that's a good thing, and it definitely is in a consolidation, so that's good. Unfortunately, the 40-day line has kind of moving over, so it's not really a strong buy. I'd want to see this thing move above. I want to see this thing move above 98.99, and currently it's 93.41. So probably not a buy, but a watch list definitely. A watch list definitely. It's pretty strong. I just don't wouldn't want to be in it right now in this market environment. I just don't want to initiate that many new positions right now because I do think the market is turning over. Now, will it turn over all the way? I hope not, but it might. And it does. When it does happen, it's fast. Now, Vista Outdoors. I do like this chart, by the way. Thank you for this. I'm going to write this down. This is a pretty good VSTO. VSTO, Vista Outdoors. Well, not a bad one. Manufactures outdoor products. Well, people want to get outdoors. I can see that. Um, Actually, very good chart. Look at that, 97 relative strength. Let's look at the criteria for buying it. Wow, it's pretty good. 7 out of 9. You know what? I think you have a winner chicken dinner. This is one that I'd be careful buying this, but definitely give you the green line on that one. That's not bad. So thank you. Thank you for that. That's a great call. Outdoors. Okay, so I am on that one. Microsoft is down. Why is Microsoft down? Well, Microsoft is down because a lot of people and the institutions are unloading it to cover their other losses. But yes, you're right. It is down. It is down. It's a 207, so it's not bad. It bounced up about 200. So it's still a great stock. I mean, it's still a great stock. But, do we want to be in it? Well, let's take a click. Yeah, it's okay. 6 out of 9. It was better. I think it's showing. I think it's showing. I think it's showing a little bit of a. It's a little bit tired right now, in terms of its movement up. So I wouldn't be initiating a new position in Microsoft. And why is it down? Well, it's not really down. It's moved back to the 40-day line. I think it's sitting right at the 40-day. Let's look at the daily chart to see if that's the case. Ah, yes, it looks as if it's trying to move back to that 40-day line. But and it is pushing up towards that, but do see some distribution days on it. So I do think that just like everything else, the market is starting to top. The market is starting to top. It's going to consolidate a little bit. We may go into a correction. That's why you want to kind of start moving into cash, at least for right now. And as long as it stays this way, you got to want to be careful about initiating new positions. That's what I'm picking up on the radar here. What about bandwidth? That is a question. I have to look at the symbol. I don't remember the symbol for bandwidth. I think maybe it's BAND. Let me see if that is true. BAND. I hope that's that one. Yeah, it is. It is great. I wasn't sure about that yet because sometimes you just don't. I can't remember all the. Boy, there's been some serious buying here. Nice, 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 nice. This is a very good one. Interesting. Provides cloud-based software-powered communications. All right, software as a service. Not bad. Yeah, this is actually a buy. This is actually a buy. Now, is it a buy at this level? Well, gosh, this is a tough place to buy it, I think. Let's see if I can look for a buy point on the weekly. I can't really give you a buy point because it's not really forming a base. But if it does pull back to the 50-day moving average, I think that would be the case. And that's 149.44. So it's at 169. So it's a little bit extended. It's a little bit dangerous to buy it at this level. I would see if it just backed about that 149 level, and I think you might have a buy here. This isn't bad. This isn't a bad one. A good chart, and thanks for bringing it up. I think you got a potentially green light there, but just be really careful buying it because this is a tough market to buy in, because so much stuff is extended. They don't really have what I consider proper bases, so it's very hard to buy these. Just be careful, go in with a half position, and just try not to get too excited. Would lithium companies be good? I don't think so. The reason I don't think that lithium companies would be that great is because even though it's a lithium-ion battery, we all know that, that's the thing that's in iPhones and all the other electronics. The problem is lithium doesn't make up a lot of the battery formula, believe it or not. The thing that you have to watch out for and the change that they need is cobalt. So I'm not so high on lithium batteries, even though they're called lithium-ion batteries. So it's cobalt that I'm more interested in as being a component of the batteries that possibly are going to be in electric cars. So that's yeah, that's what it is. JPC, is that JP Morgan Chase? I think it's J. Let me look at JPC. JPC. I think it was JPM. Okay, Nuveen Preferred. Okay, it's a closed-end fund. Yeah, yeah, this is a boring investment. But if you have money and you want to keep it, this might not be a bad idea. This is a preferred investment. By the way, what preferred shares are for everybody out there is that when you trade equities, you trade what they call common shares, and these are shares that are the voting stock of a company. There is another class of stock, typically in many companies, called preferred shares, and they're actually kind of like a debt instrument. They actually pay a coupon, and so they're more like a loan to the company. They don't allow you to vote, but they always get preference when it comes to paying out dividends. So they typically will have a level of dividend. It'll be like 5% or 10%, whatever it is, and that will be a preferred share. Now this is a closed-end fund or ETF that has them. So you're basically looking for the yield on these preferred shares. So it really kind of trains like a bond fund. Not really that excited about them, to be honest with you. I'm not that excited about them. But if you have a lot of money and you just don't want to do anything, it's a good idea. But I think it's easier to invest basically in the index funds, and I think you'll do better. That's just my opinion. I'm in Dallas. Do you do any local classes? This COVID thing has kind of thrown a monkey wrench in everything, and I am looking to do some local classes in person and also on the internet, but I haven't really done it yet. Just due to the COVID and the lack of, kind of the lack of bandwidth here. Not the lack of bandwidth here. We've got a lot of Dallas Trading Floor, but personally, my bandwidth. But yeah, absolutely. If you're interested in that, why don't you go to the website, www.Dallas Trading Floor, and just follow up with a little email to, the Ask a Trading Question. I'll just kind of show you what it's looking like on the page so you can actually see it. This is how the website looks, and it's this first button here, Ask a Question. So and that sends me to the email. Now, why don't I take directly emails? I used to do that, but I got so confused with that I didn't answer anybody on time, and it was all a mess. So I started doing this through the website, and that way I can keep track of, did I answer this person or not? That's the kind of thing. So that's why I do it that way. So thank you very, very much for that. That comment. I so appreciate it. And I'm going to start doing some trading classes because it's really fun. I mean, this is, once you get into this, and I've been in and out of this for years and years, and I started with the IBD a long time ago, and it's been my friend ever since. Now, and when I started, I didn't have hardly any capital at all, and I was trading really small positions, and that's why I have the small trading portfolio. But, over the years, I got with it, and I've always been, I usually make money in the market. So I know that, a lot of people don't, but, if you follow the CAN SLIM rules, you'd be surprised. You'd really be surprised at how well you can do in the market. And just, so that if you're interested in kind of learning more, from an educational way, without even having to take classes first, but, read a book like this first and then start looking at the classes. I'll just kind of show you on the website here. But this is a page on my website. It's like Learn to Trade bookshelf. And this is the book that I really recommend going to first. It's the one with the green cover here. It's how to make money in stocks, a winning system, good times or bad. And hopefully you'll trade it, you'll buy it through my website because that helps me out a little bit, keeps me on the air. Do appreciate that. But this other one too is really great. This is like the Cliff Notes, and it's how to make money. How to make money in stocks, a good winning system, good times or bad, getting started. That's also a really good one too. So I kind of wanted to show you that as well, so you could see, kind of how that looks on, kind of how that looks. All right, so BAC, Bank of America. Well, I basically don't like the banks. I'll be absolutely honest with you. But let's take a look at Bank of America because it is a huge bank and a very good one. It's just not trading that well, and I typically don't like to buy stocks that are trading like this. And I'll show you. As you can see, this black line here, this is the 200-day moving average, and it's pointed down. We don't want it pointed down. We want it pointed up. That's the first thing. Secondly, we have a relative strength of 31. Well, I typically only like to buy stocks that are an 80. So let's kind of look at some other buying criteria there. Gosh, it just doesn't do well. It only has 4 out of the 9. Its earnings per shares are not good. Its relative strength isn't good. Just this is not one that you want to buy. This is an avoid. Avoid Bank of America. Now, if you bank with Bank of America, there's a perfectly great bank, but I wouldn't buy their stock. I would bank there. I think they're really good, but no, I wouldn't buy their stock, and I would borrow from them too, by the way, because they have a lot of money and they need to lend it, or somebody gets fired. So um, that's also that's also a good thing. But I just wouldn't buy their stock. I would borrow money from them though. And this is Wells Fargo. And look at that. It's going down. Why do we want to buy a stock like that? We don't. In a short answer, we don't want to buy a stock like that. We just don't want to buy stocks when they're going down like this. So you want to avoid Bank of America. You want to avoid J.P. Morgan Chase. You want to avoid even Morgan Stanley. It's right now. It's not a good time for the bank stocks, and the smaller banks, they're even worse. So just don't want to own those things. I know that Warren Buffett does, and he's got gazillion dollars, and he's owned it forever. But just not. If you're an investor like me, retail investor, not a good place to be. I want to be with the growth. That's where I want to be. Buy Costco before the ER. I don't like. Well, let's look at cost. Cost is in terms of retail. This is one of the best ones out there, by the way. Costco, is tremendous. But would I buy it now before earnings in 3 days? No, because here's another thing. If you buy something before earnings, sell it before they announce. Why? Because even if the earnings are good, and many times they will be, there is a tendency after earnings for shares to sell off. This is just true of every share. And why is that true? You think, God, well, they had great earnings. Why? Which the stock should go up, right? Well, no, it shouldn't, because anticipation is priced into the price before earnings. Even if they have good earnings, then it just confirms it, and then people will sell. So, I don't think you want to buy now. If Costco shows a good number after it goes through earnings, then you might want to consider it. But right now, you don't want to buy it. And let's look at the criteria. It's very good. I mean, it's 7 out of 9, so that is tremendous. There's definitely reasons to buy it, but I wouldn't buy it into earnings. I'd wait till after earnings to buy it, because that's going to be your best bet for getting a good price and getting a good price at the right price. Yeah, what's your thought on PayPal? I love PayPal. I think it's the kind of the stock that if you can buy it, this is kind of a buy and hold, because I think it's even going to get better as the world becomes even more oriented towards the internet. But it's excellent. It's down a little bit right now. It's pulled back up to the 40-day line. Would I buy it at this level? No, I'd wait for it to move higher before I would buy it. But I still like the stock. It's a watch list for me. It's basically 8 out of 9. It doesn't get much better than that in fintech, so I can't really fault that in any way. Now, let's see if I've got a buy point on it for you. I don't really. It looks like the buy point is pulling back to that 40-day line. Currently, that's 189. It's at 187, so it's right below that 40-day line. I would want to see it retake the 40-day line before I would consider buying it, but there's been some strong buying pressure, so if you're cautious, this might not be a bad way to do it. I go with a quarter position on this, and it's just because the market I think is changing, and we might be in a situation where the market does correct. So you got to be real careful in this market. But it's definitely on the checklist. If you're going to buy a fintech, that's the one I think you want to buy is PayPal. I do think it's very, very good. Okay, so. Did you buy weekly calls? I didn't buy any calls. I am currently a seller of calls right now. I'm not a buyer of calls. Now, here's the thing about calls, and I know I hate to be this way, but typically, buyers of calls lose 70% of the time, where sellers of calls lose 30% of the time. So, and if you do a covered call, you don't lose at all, because you end up selling your stock, not for quite as much, but for a lot. So. I think that now is not necessarily the best time to be buying calls. You might want to be looking at buying puts right now. That's probably a better strategy in this environment because I do think the market may move lower. Elon shot his stock in the foot yesterday on Twitter. You know what? I don't know about that guy. He's so interesting. He's a genius. I mean, I mean, he is, but he just seems to be like he doesn't care. I mean, I don't know I don't know what's going on. But you know what? Um, I I think long term it's still a great stock, and I'm in it. So I'm not in it quite as high a level as most people. I mean, most of my buys were in the 380 range, at least for this tranche. So that's where I'm in. But yeah, it's amazing. It's amazing how snatching victory out of the jaws of defeat. It's or victory, no, defeat out of the jaws of victory. Whatever, I don't know. But it seems like it goes on with that guy. Thoughts on Square? Let's look at Square. Square is I also like Square because it really goes after the demographic that I think is just tremendous, and that's really the micro business person, that's a consultant, and I definitely like Square a lot. So, and let's look at the chart, and the charts are good too for Square. Yeah, would I buy it at this level? I don't know, but it is sticking to the 21-day line, and there is some buying pressure. So it is, again, this one is very good. It's 8 out. It's 7 out of 9 buying criteria, so that's very good, and it's 98 relative strength. Yeah, I mean, I think this is I think Square. You definitely could put it on the list. Would I buy any more than one position? No, I'd buy one position only because of the market condition, the way the market's going. But yeah, this is a good stock. So yeah, Square is Square. Get Square with Square. It's pretty cool. Thoughts on Apple? It broke out of a descending wedge and bounced off the support line. Yeah, you know what? You're right. That Pure Shine. That's a really good point. And this just kind of brings up, and you're bringing up a really good point. Um, when a stock bounces off the average, that means the programmatic traders are coming in. It looks like it did definitely bounce off that 40-day. So that's this red line here, and it looks like it pulled right above that. So, I think that Apple's going to collapse? No, this might be a very good place to buy it. I'd kind of like to buy it under. I'd kind of like to buy. I did sell it, by the way, on a stop at 109. Now I had held it for a while through the split, but it might be recovering now. I'm just a little bit cautious in this market until I get a signal that we are in a confirmed uptrend again, and not in a correction or in a correction uptrend under pressure. Then I would be more into buying it. But I still think it's a great stock, and the problem is that this announcement was a little bit underwhelming with the watch. I don't think people are that interested in the watch. Tesla bought PLL. That's interesting. Huh, PLL. Lithium mine. Huh. Okay. Well, I guess they're sourcing. That is interesting. That is interesting. Well, I didn't pay a lot for it. So they bought PLL. Interesting. Holding company engaged in electricity generation. Is that right? Did I get that wrong? I might have got that wrong. Because I have PLL. This is the symbol I have for PLL is PLL Corp. So, okay. Well, let's see. Did I get that? Did I get that wrong? Maybe I did. Let me pull off the. Let's see if I can. There we go. Yeah, this is PLL Corp that I've got here. This is PLL Corp, and it doesn't appear. It appears to be a holding company in electrical generation. So I don't know. That's interesting. If they did, I don't know much about that. But PLL Corp is an electrical company. It doesn't seem like it's a mining company. So maybe I have the wrong. Maybe I have the wrong symbol there. How's the SQQQ? Well, this is a good idea because when the market starts to change, this is a short-term trade that potentially can hedge. This is not a long-term hold. This is not an investment. This is just when the market changes. It looks as if, and I want to look at the weekly chart. No, I got the daily chart. Okay, that's the weekly chart. This is the weekly chart, and it looks god awful. The weekly chart, as you can see, just ran down, but it does look like it's trending back up. Now it's got a relative strength of 1. So look at how it's trading on a 60-minute basis. So let's see if we, yeah, it seems like it's really pretty volatile, which is to be expected. It looks like it started its upward trend basically back on the 2nd. So very interesting. It looks like it has made the bottom, and it may be moving higher. Now, if we move into a correction, this will do mega good. But I think this is a watch list right now. Don't buy this thing right away. Let's wait for a change before we go into that, because that might be a good one. But we want to see a change, more of a change in character of the market. We're still kind of this weird sideways motion right now in the market. So but it's interesting. It's definitely watch list. You can do very well when there's a massive market change to a correction. When there's a correction, you want to buy that SQQQ. Because you will more than likely do very well, and I did in the last downturn in February. I was very much into the SQQQ. Not so much now, of course, because it's we're in a confirmed we're in a uptrend under pressure. Time to buy ZUO. Well, okay, let's look at ZUO. Let's see if there is anything to. Okay, I don't know much about ZUO. No, I wouldn't be buying this one. It's a cloud-based subscription that enables companies. I don't know what it enables companies. Well, of course it does enable companies, but I don't know what it's doing. No, this just I don't like this chart. It does have a buy point of 1511. It's at 1017 right now. But it's trending down with a relative strength of 15. I just don't. I can't really get behind this one. It's not a good enough chart for me to buy, and it only gets 5 out of 9. So this is a definite no, unfortunately. Don't buy this one. It just isn't setting up well enough to be the right place. What's your thought on white bread? Well, I've been called white bread before in my life. Let me see, white bread symbol, WHIT, white bread, white bread symbol. See if I can get the right, okay, interesting, WTBCF. Okay, well, let's look at WTBCF. WTBCF. No, I can't bring it up. Unfortunately, I can't tell you anything about a buy point for white bread because I don't know what the symbol is. What is a correction of the market? Well, good question. I'm gonna look at the actual definition. So I want to make sure that I'm giving you exactly the right definition, because this is out of Investopedia, and this is kind of the kind of the thing to look at, and I just want to just show you exactly what a correction is, so that I don't missing words, and I can show you. It's actually 10%. As you can see, what is a correction? Well, in investing, a correction is a decline of 10% or more in the price of a security from its most recent peak. Okay, so that's important, from its most recent peak. So what are we looking at? How are we looking to see if we are in a correction? Because that is important in terms of in terms of how we invest, because in a correction we don't want to be invested in stock. We want to be basically in cash. And so what we do, and what I do, is we look at the NASDAQ composite, and I want to show you that, because that is what is under pressure. Now you can see it made its peak basically at the end of September, the end of August. It made its peak, and the peak was about 12,000. It's currently at 10,960. So it's not quite 10%. So it would have to decline 120 points. Well, if we took 12,000 and we subtracted we subtracted 10%, that's going to give us a level. So let's do that just really quickly. So we have about 12,000, and we're going to subtract 120. That's 10% of it, of course, and we're going to get to a level Is that right? Did I do that right? Well, let's see if I did. So our basically top level here is 12046. So let's put that in there. Let's see if we are indeed in a crescent. 12046. Oops. Yeah, 12046 times 0.9. That would give us 10% decline. So we are in a correction. Now, and this is important, we are in a correction if we reach 10843. So where are we now? We're at 10963. So we're only 100 points away from a correction, by the way. So I want this to be very clear because let's see if I can show you. I don't know if I can show you this on the screen. But we are very close to a potential correction. We will be in correction territory if we reach 10843. So let me kind of just put up a banner. It's going to be 10843 correction on NASDAQ Composite. So let's put that out there. And okay, so let's put that up. Okay, so how close are we to the correction? Well, I'm going to show you that. It's basically, that is the number that we will be at a correction at. Now, where are we currently? We are currently at 10963. So we are almost we are almost at a correction. So this is the thing you got to be watching very carefully. This is the reason you want to reduce your positions right now to cash. We want to be in cash mostly because we're very, very close to a correction. Once we hit that 10%, if we continue to go down, we will be in a correction. So that's kind of it for today. I will be on tomorrow at 2:30, and of course, if you want to, if you're on TikTok and you want to see this, all the charts and everything that I'm putting up there, it's easy to do. Just go to www.DallasTradingFloor or go to the YouTube channel at youtube.com/DallasTradingFloor. Now, if you want to go on to and get the action trade alerts, super easy to do. All you have to do is click my profile and then the link, and then it'll take you right to the sign up page. So until tomorrow, thanks everybody. Thanks for joining us, and I'll see you tomorrow. And I hope everybody is happy trading. Try to get into cash. I do think that we are possibly headed for a correction. We're very close, and we're on the knife's edge. So you want to kind of close up positions if you can right now.